Rotation into the Dow continuing, out of the Nasdaq continuing, but finishing kind of weird. The Dow, yes, it performed better than the Nasdaq. That's kind of what we've been comparing the Dow to the Nasdaq, and the S&P is fit somewhere in the middle. But today, the S&P led. Now, I haven't gone and taken a deep look at all of the S&P, but this could mean one of two things. It could mean either, optimistically, that the rotation is returning back to the Nasdaq. Maybe we've seen some, we have seen some solid gains in the Dow the past couple of days. And we're going to start flattening out and leveling off. We've kind of been flat, but very volatile. Maybe we're going to become less volatile. We're just kind of rebounding off of the bottom of the Dow rebound, off the bottom of the Nasdaq sell-off, cleaning that up, and then flattening out. The other possibility is that people are getting a little concerned, trying to hit, brand and household names that you'll find in the S&P 500. And then again, I have to go look at things like Coke, like Pepsi, which has done very well, GM, Ford, these kinds of names that people know and are American and will be around likely forever. And are doing that as a place just to park cash. Virgin Galactic doing very well today. Obviously, big announcement, big, showing strength in the leadership team and everything. But before COVID, that stock was rallying very aggressively. And it almost felt to me like people were just trying to park money somewhere. And that's kind of what's been inflating the market at these levels, putting valuations of Amazon, Microsoft, and Apple and Google at very, very high levels and all-time highs. So those all-time highs have been warranted, but maybe they're getting a little too stretched, bringing too much optimism, too much promise forward from when it will be realized. And that's typically a problem and can lead to some sell-off. Now, I'm not saying that there's going to be, a massive market sell-off. None of that. We've gone over that a million times. But we got to just kind of see how things develop. I don't have a crystal ball. Let me get that for you, crystal ball. It could mean one of those two possibilities. Either the market's going to start leveling off, or it could signify just some more selling. I think the likelihood that the market starts to rally from here is low, but possible, but I just think it's low. I think the risk reward is, heavily pointing itself either in the staying in a flat range or continuing to sell off, profit taking, all that, as tensions with China heat up. And I do believe that they were behind the Twitter attacks. So, as I said, lots of unknowns. Today, we're kind of just observing. We're going to see how things develop. And we will update the outlook probably tomorrow. But cautious, cash, not too much cash, but a lot of cash. And, nibbling on things that make sense, selling things that, we like, we've seen gains on, want to realize some profits because they might downturn a little bit. So just looking at valuations, look at price, look at valuations. Until next time, peace.